It's been an action-packed week in the financial industry, with the World Economic Forum in Davos closely followed by the European Union summit. With Eurozone being the word on everyone's lips, we've brought in Dooley Adawalla into the Dukascopy TV studio to discuss the market outlooks in light of this week's events. Welcome into the studio, Dooley.
Thank you, Natalie.
Now, the euro probably seems a good place to start. If we take a look at this euro-US dollar chart, we can see that there's been a 3-day decline from the euro against the dollar. This follows sort of a 2-week uptrend. Now, this stalemate seems to come in light of European policymakers' inability to come to a decision over the Greek debt crisis. Do you see this resolution being reached soon, or can we anticipate sort of a further downtrend?
In my personal opinion, I think I don't think there's any solution within sight at the moment for the Greek debt crisis. I mean, they're still trying to renegotiate, I think, about 200 billion euros worth of debt, which they need to do before March 20th, when they become due. And at the moment, I just don't see any solution to that. The Greek taxpayer is not willing to accept any solution. The Greek politicians have not held any of their promises. So the Greek issue is still very much an issue, and will continue to be so going forward.
Dukascopy's own Dr. Frank Hollenbeck mentioned earlier this week that Portugal is only 6 months behind Greece, and in fact Italy and Spain are only possibly another 6 months behind that. Is there the possibility that investors are becoming fixated on Greece and subsequently Portugal, when in fact they only account for 5% of Europe's total output, whereas Italy and Spain, whilst they have made sort of great saves in the last few months, actually their economies are in fact too large to be bailed out, even if they should need it?
Definitely. I mean, I think at the moment the European Union's inability to deal with the Greek crisis basically gives people little confidence in their ability to deal with a crisis in Portugal or in Italy or in Spain. And so at the moment, although I think their focus is justifiably focused on Greece, because it's a precursor to the other crises that will happen in the other countries, should things continue in this way. So basically, I think that kind of focus on Greece at the moment is justified, and it will highlight whether or not the European Union will be able to deal with future crises in Portugal, Italy, or Spain.
What, therefore, are your predictions for the euro-US dollar movements? What can we anticipate seeing?
Well, I think at the moment the 131 support has held very strongly, and I think we've tested it now a few times in the past few days, but I don't see us breaking it actually for the current moment. Eventually, should it continue, I would anticipate a move if this support would break down to 125.
Moving on now to the euro-pound. Now, ordinarily, we can see the euro-pound sort of keeping on a similar path. However, in the last 24 hours, there appears to have been a divergence, with the pound performing much better generally than the euro. Could this be attributed to a shift in sentiment, or is it more likely to have been born out of a more active concern for the euro?
I mean, the pound, after last month's move by Cameron in Brussels, I think there has been a little bit, there's a strong backbench movement among the MPs who would like to see the pound move further and further away from the euro and further away from Europe, as they don't see any real advantage to it. And I think the markets are kind of reacting positively to this sentiment. So in the past week or so, we've had relatively positive numbers and economic data, mixed bag, but relatively positive coming out of the US. And that would explain a lot of the euro-US dollar move. And I think on the pound zone, it would be, there's similar types of figures coming out, and there's a little bit of a decoupling from what they had before the movement between the correlation between the euro and the pound. So I think we could stand to see the pound probably moving up against the euro. The problem is a little bit in the Eurozone at the moment, is that with all of the packages and the agreements that they've come up with, like for example now to balance the budget, the fiscal, to have a fiscal discipline that will allow for balanced budgets across the Eurozone. The problem with a lot of these policies is that basically you might stifle growth to a point where even though you've cut your budget, or even though you've balanced your budget, you'll find yourself in a position where basically your debt to GDP ratio has still increased, regardless, because your GDP has dropped by a larger amount due to that, due to governments cutting back on spending. So I'm not too worried necessarily about debt at the moment, personally, in terms of personal debt. I think inflation is still relatively low. I think the economies within the Eurozone, in the States and in the UK, still, the low inflation allows them to have basically extra ammunition to continue with quantitative easing. And I think the Eurozone, due to Greece, Portugal, Spain and Italy, have become so worried about balancing the budget that they've basically put that ahead of the growth objective, which might be detrimental to the euro. So I don't personally see the debt being a huge factor in terms of dampening the UK economy. It depends on what percentage that debt is as a percentage of GDP.
If we move our focus onto the Swiss franc, we can see that the Swiss franc has moved within 33 pips of the SNB's supposed threshold level of 1.2200. What are your anticipated movements here?
I don't see this going anywhere. It will stay as close to the S&P mandated level as possible. Basically, the Swiss franc is dying to appreciate against the euro, and it would be at a much different rate were it not for the S&P. So I don't see it moving very far at all from the mandated level.
We spoke with Thierry Aubertin from Deloitte earlier this week regarding a CFO survey that highlighted a pessimistic outlook towards the macroeconomic environment in Switzerland and even anticipating a Swiss recession. With unemployment levels within Europe now reaching the highest level that they've been since the introduction of the euro, do you think that that sort of outlook is going to expand into the Swiss economy? What do you think?
I think Switzerland's going to have a hard time. I mean, the SNB has been very dedicated to maintaining this mandated level artificially. I think the euro is going to have a hard time in the future. And so Switzerland will be using a lot of ammunition to try and maintain this type of level of around 120. So I think they're going to have a hard time at the moment. The only good news that they have at the moment is that inflation is still relatively low, as I said, so they do have more room for quantitative easing. But I don't see where interest rates are going to go from here. I mean, we were already at rock bottom. It looks like we will be there for another at least 2 to 3 years. So it's difficult. I don't see what more really Switzerland could do, and I think they will have a hard time going forward.
And just moving away from the Eurozone for a moment, we take a look at the US dollar to the Japanese yen. In the last week, we've seen the yen rally to currency highs against the US dollar. Japan's manufacturing PMI rose to an additional high, and the US dollar seems to be performing increasingly defensively. Do you think that this could therefore be an opportunity for the Japanese yen?
No, I think the 75 support, the 75 yen support is a very, very strong support on a psychological level, which you would have a lot of difficulty breaking. I know it's flirting with it at the moment, but I think I cannot see that even if it managed to break this support, that it would have much downward momentum. So no, I don't see it at the moment. To be honest, I see the yen trading in this range, and I think as we get more and more positive. I mean, we have an election year in the US. Numbers have not been that bad. I mean, we had a little bit down on housing starts, but we had GDP figures were at 2.8% for the last quarter. We had unemployment over the year drop from 9.1 to 8.5. So some figures were looking positively, and I think we're really going to start to see an upswing in the dollar versus a lot of currencies, including the yen, including the euro, including the Swiss franc. I mean, I'm very kind of bullish on the dollar in the short to medium term, especially within this election year.
Dooley, thank you very much. As ever, the Dukascopy TV team will continue to keep you updated with currency reports on the hour. Goodbye for now.